Hi everyone, welcome back to Be Rich. Man, it's piling on the days, aren't they? We're in day 4 already. And we're in July. The year is running really fast, as far as I can see. Before we know it, we'll probably be in August, then September, October, November, December. Then the first year of our 10-year challenge is done. So I hope you're doing your Tiffin Coffee range investing. If you're in India, if you're outside India, I hope you're doing some prudent investing, like I said, in levels which are reasonable for you. Because remember, like I've said repeatedly, the market's extremely skewed to one side, and there's no reason for this market to sit on that side, but that's where it's sitting. And the case in point is today's companies, which you guys have asked me to talk about. A lot of them are sitting on the skewed side. Though the industries themselves are very vital, they're very important, but if you look up value investing lens and you're looking at through that, are you getting value for the amount of money you're spending? That question I leave it to you to answer, but I find it very hard to see value at these price points. Today I wanted to talk about the backbone of our tomorrow, that is cybersecurity, cloud, and smart brands. I kind of tied some of these companies together. Those they may not be really belonging in the same basket, but since you guys asked me over 40 companies, I tried to group them in a way that made sense. So most of them are related to this. And why have I plugged them in together? First, we spoke about gold, then we spoke about defensive stocks, then we spoke about big tech with Anand, of course. Then yesterday, I spoke about banks and fintech. So, to make all this possible, I thought what we need is a digital backbone, which makes modern business possible. That is cybersecurity, cloud, and smart infrastructure, and all things related to this. That is why I think I've tied it together. And why would you say the space matters? Because if you think about it, every company today depends on data and cloud and secure networks and AI to run smoothly. Security breach or a broken system can cost millions, if not billions. We've seen this happen repeatedly in the past. Even someone like Microsoft suffered this when worldwide they had an outage that happened. Of course, I'm talking about the CrowdStrike outage which happened. So cyber security, cloud monitoring, smart hardware are not only nice to have, they become very mission critical for these companies and our global economy as per se. And that too, with the way cyber threats are evolving, cybersecurity is becoming more and more important. So the first company, of course, I want to talk about was CrowdStrike, the digital bodyguard as they're known. These guys are the leaders in endpoint security. Even Microsoft uses them. And this is where the problem led to, because of an update which failed to happen in the CrowdStrike software for Microsoft, which led to the outage last year, I think it was. And the famous blue screen all over the world. Flights, transportation networks, hospitals across the world, things just froze for a little while, probably half a day or so. But that led to huge loss in revenue and huge disturbance, talking about global level in all industries. So that's how big CrowdStrike is. And you won't understand it till you, of course, are inside the ecosystem. And all of us realized how much we are inside the ecosystem last year. So, for example, in 2023, CrowdStrike reported over $2 billion in annual recurring revenue. That is all subscription based. And once a company adopts them and takes them in, they usually have to stick to it. And that is why it is a great business model. And because of this business model, that's why the price, if you look at CrowdStrike, it's crazy. It is sitting at $513, and of course there's no debt. And if you look at it in terms of intrinsic value, and if you look at it in terms of discounted cash flow and everything, I would say the fair price should be around $155 or even $200 at max. It is at $513. And will this correct to the point where we can even look at this? I don't know. Historically, even looking at it over the 5 year spread at these price points, it doesn't make sense. So yes, it's a great company. Yes, it's vital and it's an important integral part of Microsoft's security also. But does it justify this price? I don't know. That's why I really didn't want to deep dive into this too much, because looking at the numbers itself, I was thinking this is crazy. But then again, we have someone like Palo Alto Network and Fortinet, which you guys asked me about. These two are also in network security. They're very big in network security. Palo Alto Networks, or PANW as it's traded, or Fortinet, FTNT. Palo Alto Networks, they're into firewalls, threat tool detection, and cloud security solutions. They also have big business contracts, government contracts, and they looked at securing entire network stacks, right? They have also expanded into cloud native security and using AI driven automation, which are all big buzzwords right now in the industry, everything AI. Same thing is true with Fortinet. They seem to be also doing the same hardware-based security applications, firewalls, VPNs. And the question again comes to a lot of Fortune 500 companies use these guys. Is it at a price point for even consideration? Palo Alto Networks is trading at $206 right now. And I would say intrinsic value keeps it around $100. So it's well above, even consideration. These are all heavily skewed to one side. Even Fortinet, which is trading at $107, I would say intrinsic value is around at $72. So even there, I would say there's hardly any breathing room. The only company which comes into somewhere where we can even look at it is a company which I've already covered in a separate video, which is Cisco. Cisco is an old company. It's going through its own revolution of sorts. It's reinventing itself, which is great news. From being a product-driven company, they're becoming a solution company, subscription-based, which I spoke about in great length. I suggest you look at that video. That company, if you ask me honestly, is at a reasonable price at least. If you want to talk about reasonable price, it's trading at $69, and at intrinsic value, I would say you can say it around at $79. So there's at least a 12% gap, breathing room in it in terms of where the pendulum is sitting for Cisco. Cisco is a great company, and I would say it's one of the pioneers in this whole industry, and it is a company which has paid dividends well. It has a strong cash flow, and it's still a very integral part of IT solutions globally. Anand did famously say in the video which I did with him, if you bought Cisco in 2008, you'd be crying to see Cisco at those same price points. But then again, the flip of it is when you see an opportunity like this, should you consider it? I would suggest you should deep dive into Cisco, and out of all the companies you've mentioned, Palo Alto, Fortinet, and CrowdStrike, this is the only one which seems to be close to being attractive. The next one which you guys wanted me to look and deep dive into was DataDog, which is DDOG traded as. This company monitors cloud infrastructure. A lot of big companies use them. Amazon uses them, Microsoft uses them, even Google uses them. Plus, they track performance, security, and all of the moving parts in these cloud computing. And they seem to be a company which is at an attractive price if you're looking at the 5-year average. If you look at the moving average of DataDog over the last 5 years, at $142, they look attractive. If you can argue that. But when I look at it in terms of intrinsic value, I would say they sit around at $100. Even they seem to be skewed towards one side. The reason why I'm saying we should be careful when it's skewed to one side like this is, yes, it can be argued, like in the tech video which I did in the growth companies, that these companies are vital, these companies are required for a growing economy, that to a digital economy. You can argue the case. But my flip point to all that argument is, yes, I agree with all that, but the price they are at right now seems to be at an extreme, and I would rather wait for them to reach earthly levels before considering it. So I would love to hear your opinion about these companies. And just because their security and cloud and all that put together, at these price points, do they make sense? The next one which you guys had asked me about was actually a hardware company, which I've also done a separate video on, Super Microcomputers, SMCI. These guys are in servers, and they're tied up with NVIDIA, and they're providing AI servers which are much required for any company which is trying to do AI learning, AI implementation. So all that put together, this company is a vital piece in that. And this company, like Cisco, right now seems to be priced reasonably at $50. In terms of intrinsic value, SMCI should be around $52, $53. So it's around 4%. But if you look at the way the stock is right now currently trading and the way the forecast is looking for the stock, I would say there's probably a chance for a further correction. So this is a stock, if you're investigating and you're looking at interest in buying, maybe you can look at entering it now in small levels, maybe 1 or 2 stocks. But as the price drops, might even go down to $41, then you can look at it at a bigger level. So this is where all of these stocks stand at what you guys asked me at. And to argue, purely on what you call security, CrowdStrike, Palo Alto, like I said, Fortnite are great companies. And Cisco, DataDog, and SMCI, Super Microcomputers, there's also a great company. But if you're talking about where we can look at in terms of entering, I would say only Cisco and Super Microcomputers are the only ones which are looking reasonably priced compared to the others. So then you will say, then this whole video you only told me companies which you can't look at. Well, that's why I wanted to bring in the last one, which is PepsiCo. PepsiCo has nothing to do with this. Of course, they're using cloud computing now. They're using AI. Other than that, Pepsi's got nothing to do with this. So I wanted to offer at least a company which you can investigate further. We did talk about Coke and where Coke is priced. But if you look at PepsiCo, it's trading right now at $134. It's around 37% undervalued in terms of intrinsic value. And if you are looking at something to investigate at these high markets and high prices, it has corrected recently, PepsiCo. So this is worth investigating. I would say out of all the companies you guys have given me, this company, PepsiCo, is something worth investigating and to see if it is worth investing into. I would definitely suggest to look at its debt levels and where they are, and that would be a company worthwhile investigating out of all the companies which we spoke about. So as far as cybersecurity and cloud goes, these companies, like I said, are vital, but they are priced way too high for me to be interested in, is what I would say. I've been actually looking forward to the last day, which is day 5 tomorrow, where we're going to be talking about industrials and auto and aviation. And the companies which I'm hoping to talk about are Tata Motors, Caterpillar, CNC, Schneider Electric, and Airbus and Boeing. So that is something I'm more than happy to talk about, because there are companies there which are amazing value if you want to really invest. So that, look forward to tomorrow. In terms of IT and cloud and computing and all that, I do feel most of these companies are way too expensive for us to even investigate. We'll have to wait for them to come to earthly prices, like I said before, for us to consider. What will bring this to earthly prices? It has to be some severe shock to the system, because right now the way the market is so desensitized to any news, it is quite incredible. Even natural disasters don't seem to be giving a market a wake-up call. It seems to be shrugging everything off. So at this point of time, what Trump is doing and all the rattling he's been doing, the market seems to be in no way to wake up from its slumber, which is on. And everything is on an all-time high. Dow, the S&P 500, all the IT stocks, like Nvidia has become the first $4 trillion company. It is eye-watering prices to think about. Even if you consider that all the computers requiring AI will all have to use Nvidia, you can't make an argument for this kind of price levels. But that's where the market is sitting. Even Bitcoin has broken $1,000 barrier and is going. It's running like a freight train. I think the last I saw Bitcoin, it was sitting on $112,000 mark. So everything seems to be at an all-time high, and these kinds of times, all you can do is sit and do investigations. Yes, these companies are great companies. If it's at a reasonable price, definitely we can look at considering them. At these price points, all we can do is, okay, mark them, put them on our list and hold on to it and wait for it till the market corrects. When the markets, if and when they do correct, then we can pull out our list and then investigate to see if they have survived the storm and investigate further to invest in them. So this is where it stands today anyways. Thanks for watching the video as always. I know it's a little bit here and there because I really could not find value in any of them other than Cisco and Super Microcomputers. If your opinion differs and if you even think Pepsi is not worth it, I would like to know in the comments below what you feel and what you think. And I will definitely, like I said, collate all the comments and questions and talk about it over the weekend on Saturday and Sunday in a longer length video. Thanks for watching the video today. I hope you had a wonderful day and wish you the best. Thanks for being with me today. Good evening.